Is everything okay? Okay, so let's start. So this is our first class in the sense we are going to start content today. In the last session that happened on 8th of December, we had the orientation class. So if you haven't seen the orientation class, do make sure you watch the orientation class, because there we have discussed how this particular batch we are going to study the IFS subject in this particular batch. So do make sure, if you haven't checked the orientation class, do check this class. So now this is our first class of your achievers batch of IFS. So first of all, I will talk about the Indian financial system and overview. So this is the chapter of your module C. So I am starting from the module C. You can see chapter 20, module C, Indian financial system overview are discussing in today's session. Okay. Now, one more important thing that you have to remember, that whenever we are going to study here, do make sure you remember your module number, what module you are studying. So in total, if we talk about total, we have 4 modules, okay, and 45 units. We have 4 modules, 45 units. A and B modules, you have Indian economy. A and B module, we have Indian economy, that have from 1 to 19 units. Then module C and D, we have Indian financial system from unit 20 to 45. So do remember what particular module you are studying and what particular unit you are studying. So today we will be covering the Indian financial system and overview. Okay. Chalo. So first of all, let me know what is financial system. First, let me know what is financial system. So we have to discuss here what is financial system. Let me know what is financial system. A very basic question. If you are studying a financial system, what actually your financial system is? If you do not know the answer of any particular question, just write don't know, so that we can continue our session. We do not have time to waste. If you do not know the answer of anything, just write don't know. So first of all, let me know what is your financial system. Okay, so financial system is simply the exchange of funds among the persons who have surplus money and the persons who have deficit of money. So among the people who have surplus money and deficit of money, when you exchange funds, that is known as financial system. So financial system means a kind of system where we exchange the money from one particular person to another. And from which person we are taking money? We are taking money from the persons who have surplus money and giving to the persons who needs money, who have deficit of money. Now to complete this particular task, we have to have certain components. So the financial system have certain components. There are 3 components of this system. The first we have is financial market. First we have is a financial market. Second we have financial instrument. Okay, and third we have here the market participant. Market participant. Now, what are these components are? Let's understand. So, I am telling you basically that when we exchange funds from the persons who have surplus money to the persons who have deficit of money, this process of exchange of fund is done under a system, and that system is known as financial system. Now let's say I am the person who needs money and you are the person who has surplus money. So you want to give money to the certain person so that you can earn interest on that, and I want a money so that I can fulfill my basic needs: food, shelter, clothes, primary education. But how we both will be exchanging this fund? It's not like every person who has surplus money knows certain person who needs some money. So how we both will be meeting to fulfill our basic needs, or let's say I will be fulfilling my basic needs and you will be fulfilling your need of investment. So how it will be done? It will be done by using these certain components. First is financial market. There should be a place where you can come and say that I want to give my money to someone who is able to pay me 5% of interest, for example. And at the same platform, I should also have the option to come and ask, like, I need 50,000 rupee to purchase food, shelter, clothes, whatever. Okay. So now a certain platform, a common platform should be there where you can ask for money and I can give, I can ask money and you can give me that. And that platform is financial market. Okay. That platform is financial market. The second component, we have financial instrument. Let's say, for example, we want a financial market platform. Now, where I am saying I want money and you are saying I'm ready to pay, I'm ready to lend you money. But now, in which form? So, is it such a way like you will be carrying 50,000 rupee, 50 lakh rupee, 1 crore rupee, whatever amount you want to give as a loan? And I'm coming to you asking a 50,000 rupees. So, you have opened your suitcase and out of 1 crore, you have given me 50,000. And the other person came, you have given him or her 1 lakh or 10 lakh or 20 lakh, whatever they are asking. No such a way, there is no such a way like you will be exchanging cash with each other. You need a certain product or service in which form you can exchange your fund. So those are certain product and services we have named as a financial instrument. Buy shares, bond, debentures, Kasa Rafa, insurance product, mutual fund. These are the product and services which help us in the financial market to exchange fund. Okay. Now, who are market participant? We. You are a market participant. I am a market participant. Government is a market participant. RBI is a market participant. Adda 24/7 is a market participant. All we are the market participant. Where we participate in the financial market, we exchange the financial instrument to fulfill our needs of fund. And all this process is known as financial system. Clear? So I guess it is clear to all of you. Let me know. Is it clear? Do write yes or no. If you have any doubt, do ask. So financial market we are having here is money market, a short-term market that is regulated by RBI. The capital market, long-term market that is regulated by SEBI, Securities and Exchange Board of India. Okay. Then in the financial instrument, we have Kasa Rafa. We have insurance product. We have mutual funds. We have shares, bonds, debentures, etc. All these are what? They are the financial instrument. Now, when it comes to the market participant, who are market participant? Whoever the person is participating, like it can be RBI, the government of the country, it can be primary dealers, it can be corporates, it can be any investor. Investor can be you, it can be me, it can be any company. Primary dealers, I have written that. NBFCs, non-banking financial company, etc. They all are the market participant. The market participant means the persons who purchase or sell financial instrument in the financial market to fulfill their need of money. Clear? So this is the financial system we are talking about, the basics of financial system. Now let's say in the financial system there are two parties. One party we have is Adda 24/7. And the other party we have, let's say myself, that is Amanjot. Now let me know, we are exchanging funds between us. What we are doing, we are exchanging funds. Now let me know, out of these two parties, which party will be known as the party with surplus money and which party will be known as the party with deficit of money? So I have written the name of two parties here. One is Adda 24/7 company and the another one I am. Now you have to answer me that which of these party is sorry. Okay. Okay, so everyone is giving me the same answer, not the right answer I can say, but the same answer. That Adda 24/7 company is the party with the surplus money. No, actually, this is the party with the deficit of money. And I am the party who have surplus money. Now you will think that, ma'am, you are only a faculty and that's a company. It's very obvious the company will have more money in comparison to you. But we are talking about the financial system. In financial system, Adda 24/7 issuing its shares, bonds or debenture or whatever way by which company is raising fund. So this is a company and this company started a particular business or running a business or want to expand its business. To do all of these three, the company needs funds. So from where this fund will come? It's not like the owner of the company are using their 100% capital to run this business. So they are using their personal asset, their personal capital, their earning of their lifetime in this particular business. They won't do that. Nobody does that. If you are starting a business, you do not use 100% your own capital. No, you raise capital from the market. Because if you have spent 100% of your capital in the business, and let's say if the business is not working, how you will be surviving in the future? So company raise capital from the market to expand its business, to run its business, or to start its business. So company is issuing share, and I am the person who is purchasing shares. So let's say I have purchased Adda 24/7 shares of 5,000 rupees. So I am the person who has surplus money. I am giving 5,000 rupees to the Adda 24/7. So I will be a surplus party and Adda 24/7 will be a deficit party. Is it clear? Let me know. Let me know, is it clear? If SBI and let's say one party is SBI, one party is Amanjot, for example. In that situation, the same thing will happen. SBI issuing its bond and I am purchasing SBI's bond. So I am giving money to SBI. So SBI will be a deficit party there. Clear? This is the first example. Second example I can take, I am taking loan from a bank. Okay, in that situation, the bank will be the surplus party and I will be the party with deficit of money. So in the financial system, who is giving money, who is raising money, defines who is the person with deficit of money and who is the person with surplus of money. Let me know, is this concept is clear? The concept of person with surplus money and deficit of money, is it clear? To everyone, be active in the class. Yes, no, or whatever doubts you have, keep asking. So once Adda 24/7 is a party with deficit of money, in the another case might be possible that this company will become the party with surplus money. And same with me, here I am the party with surplus money, but when I am taking a loan from a bank, I will be a party of deficit of money. Hai? So the parties depend who is giving money and who is receiving money. Very good, clear. Next. So this is what we have discussed about the financial system. Now let's move forward. And now we will be discussing the chapter with a certain theory. So now you can see here, we are talking about Indian financial system. You have suppliers of money and you have demanders of money. So they are the deficit party, they are the surplus party. Hana? It can be individual, it can be businesses, it can be government. Similarly, the demanders can be individuals, can be business, can be government, because I have told you now, it depends on what? It depends on who is asking for money and who is providing money. So both parties can become deficit of money holder or the surplus of money holder. So they are doing what? They are transferring fund with each other. by providing a security. Security means a proof. So when I have given money to Adda 24/7, I purchase the share of company. That share is a piece of paper that gives the proof that I have invested 5,000 rupees in this company. Okay, so simply, whenever any party is giving money to each other, they provide the securities to exchange their fund. And that's a private placement. Now, you can see here the direct transfer. The saver is the surplus money holder. The firm is the deficit money holder. So the saver is giving money to the company and company is giving security to the person. This is a direct transfer. No mediator is there. I have simply giving to the money to the firm and firm is giving me security. That's a direct transfer of fund in the financial system. Now, indirect transfer of fund will include the mediator. And who is the mediator? Your financial intermediaries like the bank, financial institution, NBFC, etc. So this is the person who has surplus money. He is giving money to the bank. Okay, and the bank will give loan to the company. Company will give its security to the bank and bank will give security to you. So now this is an indirect transfer because your mediators are involved. And those mediators are your bank and financial institution. Okay, now the financial system. Sorry. The financial system, we have suppliers of money. Now this is a whole financial system you have. Hana? 1 second. Where did it? So this is the suppliers of money. It means they are the parties who have surplus money. They are the demander. They are the party who have deficit of money. Okay, now you can see how this financial system work. Sorry. So they are sending money to the financial institution, your bank, insurance company, mutual fund, provident fund, etc., etc., etc. Their money will be sent to the person who have deficit of money. This happens. Okay. Now what happened? The first case is, this is with the help of mediator. The second case, this is help of mediator. The second case you have seen with direct. Here, the direct transfer have been done. Here, the indirect transfer have been done by using the financial intermediary. Okay. And at where you are exchanging this fund, you need a certain market. Now, that's the financial market. So the financial market is the component of financial system. Okay. And the financial institutions are the market participant, and the securities you are using here, they are your what? Financial instrument. So you can see you are using securities, shares, deposits, in form of your financial instrument. You are using money market, capital market as your financial market. You are using commercial banks, insurance company, mutual fund, provident fund, non-banking financial company, individuals, businesses, government as a market participant. So this is how the whole financial system works to exchange fund among these persons. Okay, so this was in form of diagram. We have discussed what is financial system. Now let's discuss the same in form of theory. So for the growth of any economy, capital formation is essential. If you are not able to formulate the capital, if your economy do not have capital, it means you won't grow. You means your economy won't grow. It means you are not growing. So for any development, for any growth, the capital is must. Because until and unless you have money, nothing will happen. Because the economy, everything depends on the money. Let's say, if you have more money, you will demand more goods and services. When you demand more goods and services, then only production will be increased. If the production increase, your GDP will increase. When the GDP increases, your economic growth will also increase. Okay. Now, apart from this, we also have the situation here. Because your production is increasing, you will increase the employment. Your per capita income increases. Your national income will increase. Right, because people have money, they will increase literacy rate, they will increase their living standard, and somehow in the end, the economic development of the country can be seen. So you can see the growth and development is possible if the country have a capital, the country have money supply. And that's why we are saying for the growth of any economy, the capital formation is essential. Without that, you cannot grow your economy. Now, The capital is the source of fund with which an entrepreneur is able to take the risk of setting up and operating a business enterprise. So what is your capital? Capital is simply the source of fund. Hana, like from where you are getting money. An entrepreneur is able to take risk of setting up and operating a business enterprise because they are able to get the capital from the source of fund. Let's say, for example, if I want to start a business now, I won't be using my own money. I will be using someone else's money who is ready to invest in my business. Because it's very obvious. If an entrepreneur is able to take a risk, it's just because he is getting capital from the market. So the capital is, however, normally not available with the entrepreneurs, and the businesses. They do not have money. They need them. So the businesses and entrepreneurs, they are the party with the deficit of money. Okay, the capital is available instead with the person with wealth who have savings. If I am having in my savings account 5,000 rupees, it means I am the person with surplus money. Okay. Now, next, these persons with wealth, howsoever little it may, needs to be able to make the wealth available with the entrepreneurs who can invest the savings made available to them. Okay, so what we're talking about here, simply these persons with wealth, however so little it may be, doesn't matter. As I have told you, just if I have only 5,000 rupees in my savings account, still I am the person with surplus of money. So the persons with wealth, however little it may, needs to be able to make the wealth available with entrepreneurs who can invest the savings made available to them. Okay, so this is how the parties will exchange their money. Now you can see the example of wealth possessors are individuals, the firms, the corporate, the government. Wealth must thereof flow from the pockets of surplus to the pockets of deficit. It is for that purpose the financial and banking system are required. Right, so this all we have already discussed in the diagram or chart or everything. Like it's very obvious. If you want that everybody will have capital, if you want a more and more businesses start in the country, if you want more employment should be there. For that, you need to exchange the fund. Because the persons who want to start the business, they do not have capital. The capital is available with the persons who are the savers, who are saving their money. So for that, you need banking system, you need financial system. Okay. Next. So financial system, you have first financial intermediaries, the mediators who make it happen, like your regulators. Acha, can you tell me the name of some regulators in the country? Regulator means those parties who are regulating the particular sector, who are giving us the rules, regulations, restrictions, how to be done, how the business should be done in the country. Those are the regulator. Can you tell me the name of some regulators here? Very good. I got first, that is RBI. So RBI regulates the banking system of the country. Any other name? Very good. I also got SEBI, Securities and Exchange Board of India, which regulates the investment market in the country. We got Adda, Insurance Regulatory and Development Authority of India, that regulates the insurance business in the country. We got PFRDA, Pension Fund Regulatory Development Authority, that maintains your pension sector. So they are the regulators of the country. They regulate the certain particular market. AMFI is not actually a regulatory body. It's actually a self-regulatory organization that helps SEBI to make sure that mutual fund will be growing. Mutual fund are actually regulated by SEBI, not by AMFI. AMFI is a self-regulatory organization or institution, you can call it. It helps SEBI to make sure that the mutual fund market is growing. It is not regulating the mutual fund. Okay. So these are the regulatory body. Then we have banks, NBFC, insurance company, mutual fund, pension fund. These all are the mediator which make it possible for us to exchange the fund by giving their certain rules, regulation, etc., etc. Now, financial instrument, asset products. What are the asset products? By which, in case of bank, by which your loan and advances you are providing. What are the liability product in context of bank? They are the deposit that bank accepting from the public. And the services, it will be covered. Now the asset product in money market, now in the financial market, we have money market regulated by RBI. We have forex market regulated by RBI. We have capital market regulated by SEBI, Securities Exchange Board of India. We have insurance market that is regulated by Adda, that is Insurance Regulatory and Development Authority. Okay, these are what? These are the components of your financial system. The financial market, the financial instrument, they are the market participants. Now, when it comes to the financial system, we have two types of financial system. Hana? What are they? One second. First, we have. Achha, let me know. There are two forms of organization. One is formal form of organization. Second is informal form of organization. Can you tell me what is the meaning of formal form of organization or informal form of organization? In every organization, these two will be there. So let me know what is these two. The formal form or informal form. Let me know. Okay, don't know. What about rest? If you do not know any term, just write don't know. We don't have time to waste. With the regulation, it is formal. Very good. And without regulation, it is informal. Very simple. So formal form of organization means in which we have been assigned a certain KRA. Like I have been given a certain key responsibility areas that this is the role in the organization you have to perform. And this is our rule book. And you have to follow this rule book. Like you have to come at 9 a.m. You have to go at 6 p.m. You have to spend 8 hours in a day in an office minimum. And apart from that, let's say, you cannot make any contact with the HR or other department of your. If you are from the academic department, you have to sit in the academic area. And if you are from an admin department, you have to sit in the admin area. If you are from the HR department, you have to sit there. So such kind of rule book is there. Every organization have. That we also call as code of conduct. When we are going to study the module D of PPB, we will study ethics there. In ethics, you will find code of conduct. Code of conduct is simply the rule book. So when you become an employee of a company or any organization, they told you what actually your role is, plus how you have to perform it. What kind of ethical manner you should have, what kind of things you should done, what rules you have to follow, etc., etc., etc. Okay, that's the formal form of organization. Now, what is informal form of organization? So it's very obvious. Every organization have given you the rule book. Okay. Now, but when we are in the certain organization, let's say if I am in a 24/7 office, when I come to office, I have a need of relatedness, the belongingness. Like when I am coming office, I want the certain people I know. By whom I can go for a tea break, I can have my lunch, or because I'm living away from my hometown, I don't know any person in this particular city. So I have that relatedness feeling, like I should know some people with whom I can hang out or something else. So what happens now when we start coming to office, we start making an interrelation, with a certain employee. You start going watching movie with them, start spending weekend with them or something else. You are talking to each other in the office, you are going for a tea break, you are having a lunch together. This is informal form of organization. That happens. Without informal form of organization, no organization can work. So it's very obvious. The interconnectedness will be there among the people. So it's not like they're not following rule. They are certain following rule, but yes, they have their own relatedness need. According to that, they have a certain relations. So similarly, one have a certain rule and one do not have a rule. In the formal system, I know my hierarchy. Like if I have certain problem, I have to inform this party, and this party will inform to this, and then this is how it works. But in informal, there is no certain kind of hierarchy. I am friend with my colleague. Let's say, for example, I can say whatever I want to him or her, or I can call whatever I want to him and her. I do not have to say them sir or madam or something, because we are friends now. So that's possible in the informal, because there is no rules and regulation, no hierarchy, nothing is there. But in formal, all that you have to follow. I have to call my senior sir. I have to give that respect to my senior. I cannot talk to my senior in such a way I am talking to my friend here. So that's the difference between formal and informal. The same goes with the financial system. A kind of system which have a regulator, which have a regulatory body, which have a certain rules and regulation written to them. They have a certain master circulars given to them, like this is what you have to do and that's how you have to do. If you are not doing this, you have to pay the penalty. If you are not doing this, your license will be cancelled. So formal financial system are the parts, they have to follow the rules, regulation, restrictions in the country. Now informal, when there is no restrictions. Okay. Now if I ask you the example, so which particular institutions will be your formal and which will be informal in the banking system, in the financial or banking system? So it's very obvious. In the formal financial system, you will say the commercial bank, the NBFCs, the primary dealer, the regulatory bodies, etc., etc., etc. They are what? They are the part of formal financial system. If I ask the example of informal, who do not have rules, regulations, restrictions, and they are working according to their own will. So what example you will give me here in case of informal financial system? Let me know. The informal, like when you are taking a loan from a bank have a certain rules given to bank, like how much interest rate you can charge, what collateral you have to take, what recovery method you cannot use. Such kind of restrictions are there on the bank. Okay, so they are formal. What is the example of informal? No, private banks also have to follow the rules of RBI. The examples are money lenders, the sahukars, the relatives, the friend. If I am taking a loan from my relatives, there is no certain rules, regulation. It's not like they have to take 7% interest from me, otherwise the RBI will sue them. No such kind of condition is there. The money lenders are also such kind of things. The money lenders do not follow any kind of regulations in the country. So you are taking money from money lenders, relatives, friends. Every example of these will be counted as a informal system. Okay, so do remember that. Now informal system, you have individual money lenders. It can be your trader, relative, neighbors, group of persons. So do remember this. It can be directly asked, like they can ask question, which of the following is a part of informal financial system, and they will give you the name of them. Out of that you have to answer which of the following is a part, or they can ask which of the following is not a part of your informal financial system. So accordingly you have to answer. Okay, now we will discuss this chart later. First let's discuss formal financial system. So the formal financial system, formal financial sector on the other hand is categorized by the presence of an organized, institutional, regulated system which caters to the financial needs of the modern sphere of economy. It forms the backbone of economy, one of the most important system in the growth of the nation. Very simple. They have a regulator. So component of formal financial system, you have financial institution, financial instrument, financial market. Okay, so financial institution, simply the institution which helps you to get the money. So they do what? They give money to entrepreneurs and businesses who need wealth to form their business or something. So they give loan to them. They get money from the persons who have wealth, it means the savers, and give money to the entrepreneurs and businesses. So example, you have financial regulators like RBI, SEBI, Adda, PFRDA, commercial and cooperative banks. you have non-banking financial companies, you have development financial institutions, you have insurance companies, you have insurance brokers, mutual fund, pension funds, etc. They all are the example of financial institution. Achha, out of these, I think every institution you know, Hana, just give me the example of development financial institution, because I think you know the financial regulator, you know the commercial bank, cooperative bank, you know the NBFC, insurance company, insurance brokers, your mutual fund, your pension fund. I think you know about all these. What are development financial institutions? Let me know. The certain one or two example of development financial institution. If you do not know, just answer don't know. National Highway Authority of India. No, Arvind sir, this is not development financial institution. It is NABARD. It is SIDBI, NHB, EXIM, IFCI, NAFID, etc. Okay, they are the development financial institution which gives loan to develop the particular sector. Okay, so we have a particular unit about the development financial system. In the detail, we will be discussing in that unit only. So now the financial institution can be divided into two types. You can see first is banking institution, second is non-banking institution. So these include bank, other credit unions which collect money from the public against interest provided on the deposit made and lend that money to the ones in need. So banking institution or depository institutions are those institutions which are allowed to accept deposit from the money. They are allowed to accept deposit from the public. And that money can be utilized to lend or to give investment in a particular sector. So this is the definition of your banking. The business of banking is saying accepting money from public for the purpose of lending or investment. It should be repayable on demand and withdrawable by the demand draft check or etc. Clear? So that's what we are talking about. The banking institution or depository institution should be an institution which can collect money from public and provide interest on that particular deposit and lend that money, invest that money in the certain market. That's the banking institution. Now, non-banking or non-depository institution are insurance, mutual fund, brokerage company fall under this category. So they cannot ask for monetary deposit but sell financial product to their customer. Clear? So they cannot accept the deposit but they can provide you the financial product and services. Clear? Like you have insurance company takes premium from you. On behalf of that, they provide you the insurance products. Okay. The mutual funds are doing same. They are taking money from you. They are not in form of deposit, but they invest your money on behalf of you in the different market so that you can earn certain income. Brokerage companies take the brokerage or your fund to invest in the market. So these are the non-banking institutions. Okay, further financial institution can be categorized into three categories: regulatory, intermediaries, and non-intermediaries. Regulatory, you all know, they are the regulatory body which regulate the financial market like RBI, Adda, SEBI. Intermediates, commercial bank which provide loan and other financial assets such as SBI, Bank of Baroda, Punjab National Bank. Non-mediatories, institution that provide financial aid to corporate customers. It include NABARD, SIDBI, EXIM, etc. Because they do not deal with us. I cannot open account in NABARD, SIDBI, EXIM Bank, NHB, IFCI, NAFID. I cannot take loan from there. Hana? But still they are financial institution, but they are not mediators. They simply provide loan to the corporates or to the government or wherever it is required for the social welfare, they provide loan to them, but they do not deal with the public directly, है ना? That's why they are non-intermediaries. So financial instruments are in the nature of financial product and services. They include the instrument on the asset as well as liability side of the financial institution balance sheet, because on the asset side they covers the loans and advances. From liability side they cover the deposits, CASA and RAFA, the demand deposit and term deposit. That's why it is saying it covers both side of your balance sheet. Okay, they can also be in the form of intangible value added service which can facilitate financial development. Now, the financial instrument on the asset side of the balance sheet include your loan advances, your investment, your placement, or your derivatives. These are the instruments from the asset side. From the liability side, you can see deposits, money accepted from customer for remittance, insurance policy, mutual fund unit issued, and contribution received from building up a corpse for payment of pension. So it's very simple. Assets and liability. What is the difference between these two sides? Liability side means it's your responsibility to pay back that money. Whenever the customer is asking it's his or her money back, you have to give that. That's your liability to give that money back. Asset means simply your what? Your own property, the something that you own, and that you have right to ask back from the customer. That's your assets. That's why when the bank provide loans, that's the asset of the bank, and when bank accept deposit, that's the liability of a bank. So asset means which belongs, something which belongs to you. You own that. And liability means which belongs to someone else. You have to return that whenever they ask for. Next. A financial market is a market where buyers and sellers trade money, commodities, financial security, foreign exchange, derivative, low transaction cost at prices that are determined by forces of demand and supply. That's true. Financial market, we have seen SEBI, etc. What are they? They are the financial market, and what they are doing, they are actually providing us a platform to exchange the fund. Now we have four major segments in the financial market, you can say. The money market, the foreign exchange market, the capital market, and the insurance market. These are the four major segments. Now let me know who regulates them one by one. Let me know who regulates these markets. Money market, forex market, capital market, insurance market. Who regulates them? Okay, very good. The first is RBI. The second is RBI. The third is SEBI, correct. And the fourth is, nobody have written till now about the fourth, IRDA, okay. The fourth is IRDA. So do remember the regulatory bodies as well, okay. Now we have to discuss, one second, the chart, flow chart. Okay, so this is the flow chart of financial system we have to discuss. You can see here, in Indian financial system, you have formal organized financial system. You also have informal financial system, but informal financial system will cover your money lenders, your relatives, your friends, so that's why I have not added them here. That's very basic, informal. Now in the formal, you have financial intermediaries that have regulators, financial institutions, financial markets, financial instrument, financial services. One second, I should write made it. Okay, so in the formal financial system, these are your components. The regulators, the mediators is your financial intermediate, financial institutions. You have financial market, you have financial instrument, you have financial services. So in the regulators, you can see it is written here, regulator, Ministry of Finance, SEBI, RBI, Adda. In financial institution, banking, non-banking, mutual fund, insurance, and housing company, all are there. In banking, scheduled commercial bank, non-scheduled commercial bank, cooperative bank, all are written here. In non-banking financial company, we have development financial institution, non-banking financial companies, and then we have mutual fund, then we have insurance company. In the financial market, you have capital market that includes equity and debt market. You have money market that regulated by RBI. In financial instrument, you have short-term, medium-term, long-term instrument. You have type, primary securities, secondary securities. Primary securities are those which are issued by the companies. Okay, the fresh issue market or a new issue market, you can call it. So whenever a new security will be issued, that will be issued in the primary market. Secondary market, on the other hand, is a market where the existing securities will be traded. Okay. Now the financial services, depositories, custodial, credit rating, factoring, forfeiting, merchant banking, leasing, hire purchase, guaranteeing, portfolio management, underwriting, etc. Now all these, whatever written here, each and every term we will be studying in detail, because your module D, all the units about this single slide. So if you can see depositories here in the capital market, you have to study depositories in detail. CDSL, NSDL, what they are doing, who have introduced that, why they have been introduced. Then if you can see here, All India Financial Institution, you are going to study that in the module C only, Development Financial Institution, NABARD, SIDBI, EXIM, etc. All in the detail you have to study. If you can see here, debt market is the market in which you are taking a loan from the market by issuing your bonds and debenture, because bonds and debenture, they both are your debt instrument. Debt instrument means loan instrument. So your maturity period, your rate of interest will be fixed for how many years you have to take that money and what interest you are going to pay. That will be defined. So each and every term written here we are going to study, but in their individual units. Okay. So first let me know, till now, whatever we have discussed, is there any doubt in that content? Till now, whatever we have discussed, do you have any doubt in that? Let me know. Okay, no doubts. Nobody have any doubt till now? Okay, done. So let's move forward. Next, we have phases of development of financial system. Now, before going forward to the phases, first of all, the system, the financial system we have to study is formal financial system. And one thing is very important that we have to remember, that the formal financial system started, or we can write started, or evolution of the formal financial system, whatever you want to write, in 1770 with the Bank of Hindustan's establishment. So in 1770, Bank of Hindustan was established in Calcutta, and it was the first Bank of India. You can call it first Bank of India, you can call it the starting of formal financial system, both are same. In both form, the question can be asked. They can ask in which year the formal financial system started in the country, by the introduction of which bank, and they have given you blanks, the dash have been given. And in the options, they will be given you year and the name of the bank. So you have to remember 1770 Bank of Hindustan. This is the one way of asking question, like when formal financial system is started. Second, they ask in which particular year Indian banking system started, or they can ask which of the following is the first Bank of India. So the answer will be 1770 Bank of Hindustan. This is very important, remember this. So history has recorded it is written already. The history has recorded the first commercial bank set up in India. It was Bank of Hindustan in 1770. Similarly, the first insurance company set up in India was National Insurance Company in the year 1906, and the company is still in existence, but bank is not. Bank of Hindustan have been failed. The insurance company, the National Insurance Company, is still in the existence, but not the bank. So development of financial system in India can be segmented into 4 phases. We have 4 phases: pre-independence, post-independence, post-liberalization, post-global financial crisis. Now, do remember pre-independence, why we are calling it? Because Britishers used to rule us. So we got independence in 1947. Before that period is known as pre-independence. Post-independence, when Britishers left the country and we got the independence, is 1947 till 1991. Why 1991? Because in 1991, we have introduced the LPG policy. So from 1991 till not 2010, but actually till 2008, or we can say 2007, it was the post-liberalization period. Because new economic policy was introduced, or the economic reform have been done in the year 1991. And that was liberalization, privatization, and globalization. And that's why 1991 to 2008, we are calling it post-liberalization period. Okay. And from 2008 to present, we have post-global financial crisis. And I guess you know in 2007-8, we have faced the global financial crisis that is also known as Lehman collapse. That was the global financial crisis. So that's why the 4th phase have been introduced, that is post-global financial crisis. Okay. And this is how in the 4 phases, the development of financial system we have to study in this particular chapter. So first phase, that is pre-independence prior to 1947, we will be covering in the next class. So do make sure whatever we have studied, revise it before next class so that you can link the further content with each other. Okay. And the PDF of the session will be available for all of you. Apart from that, those candidates who are watching us on YouTube, I just want to let you know all that the batch we have introduced, that is the Achievers batch, started from 8th of October. But on 8th of October, we have only had the orientation class. The content or the study of the syllabus we are doing from today onwards. So if you want to enroll in the batch, you can enroll by going to the JAIIB May 2024 section. You can find here JAIIB Achievers Foundation batch. This is started now. If you want individual subject batch, that is also available. Click on the view all option. Do check the individual subject as per the language proficiency of your whatever language you want. Or if you want, you can go with the Mahapack as well. This is also option available. How to enroll? Just click on the product. Do check the offering, what the product is offering to you. Check the validity. Click on the buy now option. And if you use this code, you will get 75% discount only. To get more discount, you can use the code Y496. Click on the apply. When you apply, you will find 77% discount. But if you use the same code, that is Y496, on application, you will get 1% additional discount by using the coins. So you will get 78% discount, the 9 months validity in the Achievers batch. Okay. And this will be available by using the code Y496, the 78% discount. Okay, so this is the information for all of you. From tomorrow onwards, you won't be able to find the demo sessions on YouTube. This is the only or last session for your demo. And see you all students in the paid class who have already enrolled and those who are enrolling in. See you all in the paid class. So tomorrow we will be meeting again from 9 to 10 p.m. Okay, and before that, do make sure you revise the content. Clear? And in the end of the session, you will get the feedback page. So do make sure whenever the class ends, you definitely fill that particular feedback form. That will definitely help us. If you're finding any problem, we will be here to solve that. Okay? So let's end the session. Good night, everyone. See you all tomorrow. Bye-bye.